Hello, this is Ahura, and we'll be with you with the global economic outlook in the week ahead, which is going to be the week 26 in 2025. As always, let's first check what we had previous week, and then we can go forward and check the week ahead. As you know, the previous week it was the central banks meeting. Central banks week, we can say actually, while the geopolitical tensions also it was high and still is still continuing high with the ongoing war, we can say at least right now. To that, it's not already any other conflict. It's already the war between Islamic Republic in Iran and Israel. So with the central banks, we know the central bank in United Kingdom held the rate at 4.25 basis point, while they changed a little bit on the number of the voters, 2 against 7. It was expected for rate cut, but the 3 members they voted for the rate cut. However, the 6 members they voted for holding the current rate, which at the end holding the rates is decided in the Central Bank of the United Kingdom. However, with the ongoing inflation data, labor market and GDP grow, I think it was better if the Bank of England could cut the rates. But anyhow, with these numbers, we can say that the next meeting, 100% we have to count on a rate cut. In United States, after as it was 100% expected actually, holding the current rate, they hold the rates, but this not the surprise, but somehow the surprise was on the dot plots where they lowered the economic growth expectations and also increased the unemployment rate, while they increased also the inflation expectations as well. Out of these countries in Eurozone, we know the economic data still was weak, and after the June 5 rate cut by 25 basis point in Eurozone, we can say that right now with ongoing inflation numbers, which is already in the under 2%, at 1.9% in the Eurozone, and in line with market expectation, in line with the ECB expectations. So we can say right now that from the next meeting, probably we will see central bank in the Eurozone to hold the current rates. In other countries out of the Eurozone but in the Europe, we know that the SNB they cut their rates by 25 basis point to 0%. Riksbank in Norway, in Riksbank actually, sorry, not in Norway. Norway also the previous week they cut the rate 2 weeks ago actually. Riksbank also they cut the rates by 25 basis point to 2%. Generally, what we can see in the global central banks trade, that the central banks they're cutting their rates and that they're trying to support the economy, which is somehow get heated by the geopolitical tensions, by trade tensions overall. Out of the Europe, in China, Central Bank of China, People Bank of China held the rates for 1 and 5 years prime rate at 3 and 3.5%, in line with expectations. However, retail sales and other economic data from China, they were a little bit better than expected, mostly because of stimulus packages that government of China had recently. In Japan, as mentioned, they hold the current rate at 0.5% or 50% unchanged, but we expect with ongoing inflation numbers, ongoing the economic data that we have, we expect the Central Bank of Japan to increase their rate by 25 basis point to 0.75%, as they did in Brazil. The Brazil also they increased the rate by 0. To 15% by 25 basis point or 0.25%. In other economies, in Turkey also they held the rate at 46%, but World Bank increased the GDP growth of the Turkey, GDP expectation for the Turkey a little bit higher to 3.1% from previous 2.9%. That was what happened generally in the previous week. But week ahead, after previous week's central banks meetings, in the week ahead, we will have the too many speeches actually from these banks members, where they are going to explain why they made such these kind of decisions previous week and what's their expectation from the economic growth. So the main market mover in the week ahead actually it will be the speeches, but still on the economic calendar from the Eurozone and in UK, we will have mostly the focus on manufacturing PMI numbers, and not manufacturing service and overall composite PMI numbers. We can say generally in the PMI numbers, we expect to see manufacturing sector slightly to increase, but service sector also, but service and both service and manufacturing sector actually we expect to see slightly increase, but not such a big move that we can say, okay, now we can count on economic growth in the Eurozone. It's the same thing we expect for British economy in the United Kingdom as well. In United States, we expect to see S&P actually say S&P Global Service PMI to slightly ease to 52.9 from previous 53.7. Same for the manufacturing sector, also to slightly increase from 52 to 51. Generally, but still it's expected to stay steady above 50 expansions level. But for I mean, if we put aside the PMI number, we can say that the inflation data in Canada also should be watched closely, because after 0.1% fall of inflation in April, we are expected to in April, yeah, we expect to see that inflation in Canada to increase by 0.1% to slightly bring up the inflation, overall headline inflation, to 1.8% from previous 1.7%. Generally, we expect to see that the Bank of Canada, with the ongoing data, to cut the rates by another 25 basis points in its next meeting. Also, we will have the consumer sentiment on Friday for the Eurozone, and the consumer sentiment and consumer confidence, or business climate, consumer confidence, and economic sentiment. All of them for these numbers, we expect to see a little bit increase to both in both sides of the customers and businesses, to see a little slightly improvement in the business sentiment and the confidence, but still they are in a very concerning areas, like for example the consumer confidence expected to stay unchanged at minus 15.3, or business sentiment or economic sentiment, which is slightly increased, expected to increase, but it will increase to only 95.5 from previous 94.8. So the improvement is fine, but it's not good, we can say it this in this way. But however, the next week on the economic calendar, the focus in the United States should be turned towards personal income and spending numbers. However, which is going to be published on Friday. Before that, we have some other data also to watch, such as the housing market. We expect to see the home price to slightly fall. We expect to see the new home sales to increase by more than 10%. But GDP numbers also supposed to publish on Thursday, where we expect to see that GDP to increase to fall by 0.2% for the first quarter, in line with expectations. But GDP price index expected to stay unchanged at 3.7%, which means that with slightly hard conditions in the GDP growth, we have the prices still steady, which can increase again the risk of stagflation, but it's not such a big risk that we can talk about. But right anyhow, we have to give some chance for that idea as well. For the personal spending and income in the first quarter, which the data of that, which will be published on Thursday, we expect to see the personal income to increase by 0. That's for the first quarter. Yeah, we expect to see by that personal income to personal spending to increase by 0.1% after 6.3% fall. Oops, sorry, that's on Thursday. Other number that we supposed to publish and should be watched closely is the personal income and spending, or data generally. We expect to see the personal spending to increase by 3.6% annually in the first quarter, and personal income So other data that should be watched closely on Thursday are the pending home sales were expected to increase by 0.1% after a 6.3% fall in May. Also, the durable goods order is expected to increase by 6.8% after 6.3% fall in April. May numbers should be increased mostly because of more orders in more aircraft orders and or Boeing orders that we have. Excluding the transportation, we expect to see durable goods orders to increase only 0.1%, lower than 0.2% that we saw in April. Generally, this data is still confirming that the orders are fine, and while the orders are fine, so we can say that manufacturing, labor market, generally they are positive. However, the focus will turn to Friday's data, where we expect to see personal income and spending numbers for May. However, as mentioned, again, we have too many speeches that's supposed to be have on the same day, but still, the personal income expected to increase by 0.3% in May after 0.8, 0.7, and 0.9% increase in the previous months, which means that the personal income can slightly ease, but still 0.3% is fine. If we, I mean, 0.3% in a nominal name, which is the nominal name, which means that if you, if inflation, if you count the inflation by that, the real personal income can increase only, it can fall sometimes even by 0.1%. So, but personal spending, which is expected to increase by 0.2%, can show a little bit more cautious number and cautious digits compared with the previous months at 0.4, 0.5%, which means that the people are a little bit getting more concerned about the economic growth. So they're trying to save money than compare with the previous months, which they were spending their money. Both core and headline personal inflation, personal spending inflation, expected to increase by 0.1%, which means 2.5% for core personal inflation, core PC price index and PC price index at 2.1% to stay unchanged. Both of them, the core PC price to stay unchanged at 2.5% and PC price index to stay unchanged at 2.1%. That's the data that we expect to see in the previous in a week ahead, which would depend. Let's go to send the charts and see. Yeah, here's there's the charts. Let's see how these data can affect the markets and can affect the chart. That's the US dollar index. After several weeks of falling, previous week we had dollar index slightly increase after the central bank held the rates, and after that we saw the geopolitical tensions increase, and that increased the demand for the dollar index safe haven as well. For the week ahead, with the expected data that we expected data in economic calendar and also geopolitical tensions going on, we expect to see the dollar index to stay positive between 98 and 101 and get some demand based on the condition that we have. So the 98 and 101 is the next this the area that we expect to see dollar index to be moved. With this condition ongoing, with the higher dollar index, with the higher rates, gold price was slightly under pressure previous week, but generally what we can say is that with ongoing the political tensions, the gold still in a demand in a bigger picture. Maybe in a short term we saw some pressure on the gold, but still in a bigger picture it's just a positive. So any correction downside could be the buy opportunity. On the energy market, while the geopolitical tensions in the Middle East can hold it in a buy position, at the same time, oversold, over supply in the market, and also slower economic growth expectations, they increase the supply and lower the demand. And with the ongoing tensions, they can somehow overcome each other and hold the energy prices steady around $70, between $70 and $76, or better say $72 and $76 is expected oil price, WTI price for the week ahead. And I don't think that they should be. I mean, these ongoing conflict and tensions could increase the price much higher than unless if there is a specific thing happen which can be very short-lived. I mean, increasing the tension in the Persian Gulf and increase the oil price a little bit higher. But generally, even if that happened, that can be very short-lived momentum in the market. So generally, the price could be around the current areas. On the stock market, with the holding the higher for longer the interest rate in the United States and ongoing geopolitical tensions and uncertainty in the market, we don't expect to see to see the positive reaction in the stock markets. So stocks could be under pressure, especially if the S&P 500 breach under 5,800, that can open the doors for lower digits around 5,600 and then 5,500 areas. Generally, very negative about the stock market. Same thing can be stated for the Dow Jones and Nasdaq as well. On the cryptocurrency markets, Bitcoin, after the reaching new, the new highs in the previous weeks, not the new all-time high, new highs in the previous weeks, about 106,000. We had some correction, and that's still trading between 103 and 104,000, which is lowering from the previous highs. As you can see in the RSI and OBV also, we can see the lower the downward expectations. So generally we're negative. I'm still personally negative about the Bitcoin price, especially if that breach under 102,000, and then 97, 94, and 88,000 could be next targets. That's generally what's happening in the previous week and what we expect from the week ahead. If you had any other question, don't forget to write in the comment section. I'll try to get back to you as soon as I can. Have a good time. Bye.